Oh, good morning. This is George. Good to be with you on this bright UK morning. Now, we've got quite an interesting market going on this morning, but we're not actually going to be looking at the markets today. Just going to run through a process of what traders every now and again get into, and that is that they have to somehow recover an account from a series of losses. And this is where disciplined patience comes in to this account recovery process. So let me just check again that you can both hear me satisfactorily and indeed you can see the slide. So yeah, if you could just put a little comment in the chat box, I will then know that all is well. Brilliant. Okay, Ahmed, that's excellent. Good to see all of you guys in the room this morning. So let's get started. Now, this presentation that I'm just about to run through actually comes from my latest course, which is the 10-minute swing trader. People don't want to spend too much time looking at the markets, and also there are those out there who, for whatever reason, are not interested in intraday trading, and consequently I've put this program together because it's based on how I do my own swing trading, and it will be sort of coming out fairly shortly in the next month or so. So let's just then get stuck in, and what we're going to be looking at then is discipline and patience blown. Now, bear with me a second because we seem to, yeah, that's it. Discipline, patience, and account recovery. So let's just look at this situation that develops. The discipline and patience that hopefully most of us can use in the markets most of the time just gets blown. It just gets blown for whatever reason. Can be all sorts of things which will actually make us lose our cool in the markets, and it happens to the best of traders from time to time. So it's the agony of an account blow up, and most traders, and in fact I would I'm not actually going to ask you this question directly, but I will make the statement that I assume that it has happened to some people who are in this room right now. Now, typically, it does happen to beginners, and it happens in the US for those people who think that they're going to go in and trade fortune, make their fortune out of trading options. And in the UK, it's those who, again, have got that starry-eyed idea. Right. Thank you indeed. Yeah, thank you for your honesty, guys. Well, yeah, okay. Well, you know, it happens to traders from time to time, and of course, you know, it's not always going to be the trader's fault. And you mentioned, of course, you talk about Alpari recently. And as we're just coming back to the UK, spread betting is the game in town, and typically, if you speak to spread betting companies, they have to keep advertising for new people because typically people only last 6 to 8 weeks. They blow the account and might put a bit more in, and then they're blown yet again. But it does also happen, of course, to the well, say the best of them out there. It happens time and time and time again, and we get headlines that come out of those traders. Usually they are hedge fund traders, and it's not their own money, and they blow the thing. And well, we've had some enormous blow-ups that we know about. And of course, you get traders. And in fact, we go right the way back to Barings Bank, which was one of the first highly publicized blow-ups by a trader who supposedly, at first glance, this guy had salted away sort of to the equivalent of 2 million quid. But it actually they quickly realized he'd lost the lot, and he was managing to hide them from his from his employers. He'd managed to hide those losses. And what was he doing? He was in a negative spiral. He was in the losing spiral. Google Victor Niederhofer. Now, he's an interesting character, hedge fund guy. And there was a wonderful article called, they called him a blow-up artist because he'd done it several times. And lo and behold, his investors in his fund actually came back to him and they lost money all over again from him. So, you know, it does happen. It does happen. So why does our discipline and patience end up blown? Why? Well, there are several reasons. There are several reasons. Now, it could be an Alpari moment, which is, well, more or less totally out of our control, more or less. And there's an old expression, it's called pride comes before a fall. Pride comes before a fall, you know? We start to big ourselves up, and when we're thinking that we are the best thing since sliced bread, something comes along to kick us in the shins and just realise that we are actually just sort of regular guys and gals, and we occasionally will catch the Superman or woman bug, the super person bug. And it's just like the common cold. It strikes when you least expect it. So when you think everything's going really, really well, you'll catch the Superman or woman bug. Now, again, I wouldn't be at all surprised if one or two people out there in the audience have actually experienced this. It comes typically just after you've made the trade of the month. It's the big one. And even better is a super successful month, or even a couple of months. You know, you can walk on water. The cape that you've got, you know, you've got the underpants on and you've got the cape flowing behind you and you're walking around the room and you can do no wrong. Life is great. Everything is going superbly. And of course, you're well on the way to making that second million, or the first million, or the first 5,000, or the third successful month, or whatever it is that floats your boat. Now, was it the trader or was it the market that actually burst that bubble? Great comments coming through, guys. Keep them coming. Keep them coming. Great, keep them coming. Was it the trader or was it the markets? Well, what actually happens, you know, we've got this Superman cake flowing and we think, yeah, we can trade anything, make money, you know, hit any market, you know, hit the bid, hit the offer, whatever. But then the market starts to run against our positions. And why is it that the market runs against our positions? Well, this is the tough one. We do not want to admit this. We just do not want to admit this, that simply we were wrong. Wrong? Me? No. It was all those other traders out there. They've got it wrong. They're the ones who are wrong. I couldn't possibly be wrong. You know, let's just think about it for a minute. Just maybe we were trading on trends, and we've got some superb trends. In fact, we've got some tremendous Forex trends right now. One of the greatest Forex trends was that big run up in the US dollar. And what's it doing this morning? Damn it. It's coming back against. So just maybe then we were into trend trading mode, and then the market dynamics shifted, and then it became range bound. And in a range bound market, damn it, it's bouncing up, it's bouncing down, and it bounces up, takes out a stop loss, bounces down, takes out a stop loss because we're on the other side of it. And before you know where you are, you've got 4 or 5 losses, stop losses, in a row, and the account is starting to look a little bit shady. Of course, you know, we may well have been exactly the opposite way around. The trading ranges were working really well. We've got our neat little oscillator, we've got the bands, we've got the upper band, we've got the lower band, and we've got our favorite oscillator at the upper band. It then just curls over and we sell, and it runs down to the bottom end of the trading range. With any luck, it's a couple of hundred pips. And then what happens? It comes right well back again as it bounces off the bottom band, our bottom line, oscillator starts to perk up, and we think, yeah, that's great, we're going to make money again. And then, after a while, it breaks out. And we're still in range trading mode. You know, our oscillator now is saying, sell, 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 sell. So we sell, and we let's double up. And what happens? That darned oscillator just stays at those highs, and that ruddy market, well, it just keeps going up and up and up. And they're the two typical ones there that we tend to get locked. Our thinking gets locked. Just like that darn computer when, you used to get the blue screen of death. The thing just gets locked and it will not shift. And that happens in our brains. Now, there's another syndrome, and this is the one I call the God syndrome. It's very, very similar to what we've just been looking at. Very, very similar indeed. And what tends to happen here is that we get a belief. We get a belief. It's almost like, a belief which has been somehow forced into us. And a trader will get a belief, and I say it's like a little weevil, and a little weevil is a horrible little bug, and it'll weevil its way into the subconscious. This belief will get into our subconscious, and what it does, it's just like a little virus in there, and it works away at denying everything other than the belief itself. Okay, it's a denial creature. Denies everything that the conscious mind actually sees going on and is being told and can see in writing and is plain as day to people who haven't actually got the belief. Yeah? Ever got a belief? This market is going up. It is definitely going to be going up. And I mean, there was a wonderful story about this. After a few drinks with some guys from a spread betting company, and they said, "Yeah, how would you like to have an account which is worth just over £500,000?" I said, "Yeah, oh yeah, that's great, not bad, wouldn't mind that account. Yeah, fine." How would you now feel if you actually started off with 9 million? That's a different story. And what actually happened was that this guy was a Far East investor, a trader, and he decided that the Dow was going down. It was going down. And that was his belief. So every time it went up, and he thought it went up to a new peak, which was going to be the absolute top, he sold the hell out of it. He sold it. Damn it. It went up, took out all of his stocks, on up it went. And this went on and on and on and on until this guy had almost lost the entire 9 million. And eventually he stopped. He had this belief, and it killed him. It absolutely just killed him. Now, I've spoken to a lot of people, I've trained a lot of people, and I've worked with a lot of people over the years. And what I have to say is that I do generally find that people who have been successful in sort of real life, the life outside of trading, those people, and forgive me if I'm speaking to anyone who are here right now, but I find that those people have a big problem with this God syndrome, because in a former life, in the real business world, they could actually impose their beliefs on others. And that's one of the things that actually got them the success that got them to where they are today, or were yesterday, in that super successful position. And so, everything that worked really, really well when people maybe had a conventional job, or they ran a business and they climbed the greasy pole and really got on. None of that is any good in the markets. And some people have a real problem. You know, if they were super successful at something else, they are going to kill this market. They are going to absolutely nail it. And that belief somehow just does not work. It just does not work in the markets. Right, so the spiral, and this is where the killing starts. Now, you know, anyone who's been in a spiral, a losing spiral, and you notice sort of how one bad trade tends to lead to another, and another, and another, and another. The trader, the sort of the brain starts to say that, I just want one really good trade to get back the losses. Just want to get that next best trade, next best trade. And of course, there isn't just one good trade to actually get us back on track. What we need is a whole series of good trades, of modest trades. Some might win, some might lose. And it doesn't matter a jot what the next trade is going to do. It matters about the next series of trades, and it matters that we're doing things right. And that we've discarded that Superman cape, and we've got rid of pride, and we can get rid of strong beliefs about which way the market is going, and we can just observe and trade accordingly. So what does the trader do? You know, wants to get a good trade, or just a few real good trades, and they forget the standard industry-wide 2% risk of any one trade on the account. And they jump 5% or even 10%. And by betting more on a particular trade, this is just like the roulette play of the martingale strategy, where effectively you double up. So, you know, if you win or lose, you put double on the next play. And of course, you know, there was that wonderful book about how I broke the bank of Monte Carlo. Well, every now and again, somebody gets lucky and they'll get all the money back. But for everyone who wins by doing that, there are another 99 who lose. And they pay for the one lucky guy or lady who walks in and breaks the bank of Monte Carlo. So it never works. Now, the other thing is that we tend to start to chase entries. You know, if we miss the best entry for whatever reason, we were looking the wrong way, or we were out on that day, we just missed it. Fear of missing out on that trade of the month or trade of the century, it gets us in late. We sort of wade in, we chase a trade, only to find that having chased the trade, the darn thing reverses and it takes out that much bigger stop loss that we had to put in a much bigger stop loss because the thing had moved quite substantially before we actually got in. So that's how the spiral sort of really kicks off. It starts off with dodgy thinking, and the brain then just thinks us into doing all these crazy things to get us back to where we were. Now, This is what so often happens, and I guess that many of you actually have seen this chart before. And what we've got is that we've got this little comment here. So, the price is going up. Let's watch the market. Yeah, trend is holding. So we wait and wait and wait, and we think, damn it, yeah, late, you know. But if I wait any longer, I won't profit from the trend. So let's get in and buy it. So that's what we do. Good thing I didn't wait. You know, it goes modestly in profit. And then, oh dear, it starts to come back. You know, I'll use this correction to increase my position. Brilliant at this price, let's double it. Oh no, ouch, as soon as it goes back up, I'm selling out. I don't believe it. It must have hit absolute bottom. No, right, let's be cool. Wait for it to recover. Wait for it to recover. What are the regulators doing about this? Enough. I can't take the pain anymore. I'm going to sell out. drops down a little bit further. Ah, yeah, good thing I sold everything. And then it recovers a bit. No, it's going to tank again anyway. Yeah, I told you so. There we are, down there at number 14. What? What? It's going back up? Huh? What the hell? Ah, these idiots. They're all going to get taken to the cleaners. Ah, this is it. I knew it was going to happen all along. That's more or less, damn it. I'm buying again. It's cheaper than last time anyhow. And that's the spiral, guys. That is the spiral. So just work on the basis that never let a profit become a loss. So what about recovery? Well, I put at the bottom here, take time out. Just take time out. It may be an hour, or it may need a week or more. Just take time out, and firstly, you've got to acknowledge the problem. You're not going to take time out until you've acknowledged that, yeah, we're in a losing spiral here, and it could cause a big problem. You could become the next Victor Niederhofer. So if the account is actually blown, well, you know, the problem is thumping you right between the eyes. But it just might be a margin call. And whatever you do, don't pay it, because you are wrong on that trade. Don't meet that margin call. The most important thing is just to stop. That's the best way to cut a spiral with a knife. You quit the losing spiral by quitting, for as long as it takes to clear the mind of all assumptions and beliefs about where the market is going to go next. And, for some of us, we can just go and have a cup of tea. Or we might want to take the dog out for a walk. Or we might want to do what our spouse has been telling us to do, which is to go clean the loo or clean the garage or do something like that, just to get our brain completely away from the markets. For me, get the boat out, go for a sail. But take time out and just take whatever time it is to allow the anger at the markets, at those other traders, or at ourselves, to allow all of that to dissipate so that we can then come back and be cool, calm, and collected when we look at the market next. So, discipline and patience. Discipline and patience. What we now need to do is to move into defensive mode. Now, that really should have happened after the first little series of losses, when things were still quite containable. So, if we're lucky enough not to have gone into that crazy death spiral, and we find ourselves just getting a series of losers, then defensive mode is the thing to drop into. Superman cape, that's all gone. We've got to get the ovals on, got to roll the sleeves up. We want to just reconfirm that our trading strategy is good. If it isn't, if we were just making a lot of money, say, out of range trading, and it worked really, really well for us, then we've got to accept that, and we've got to wait for the market to drop back into range-bound activity, or the reverse for trend trading, or indeed get ourselves a strategy which works in either one or the other, so that we can be clear on what is a range and what is a trend, and we can modify the way that we use our oscillator, and so that we can make money in either. So we want to look back at all those losing trades, and those losing trades will tell us if we can be reasonably open to looking at those losing trades, and they will tell us what the market was actually doing, not what we as traders wanted it to do. And we need to become humble. We need to accept that it's the market which is always right. No matter what it does, the market is always right. It might make this crazy move, and our belief is that it's a crazy move. Well, it isn't. Forget that. The market is doing what the market does. What we got to do, we got to be humble, and we've just got to follow what the market actually does. We might anticipate some of this stuff, but we got to be humble and allow the market to come to us and accept that it's us who get it wrong from time to time. So, discipline and patience can certainly lead to good trading. And so we want to get the brain back to a positive acceptance of the success. Forget all of those beliefs. Forget about what the latest guru said about which way the market's going to go. We've got to get ourselves back to looking objectively at what is going on, and we can build that positive acceptance of success, and we can do whatever it takes. Now, some of us just might chant our trading rules to get them really embedded in the subconscious. It works so well. If you guys remember your 10 times table, 8 times table, 9 times table, could you go through all of those? Well, it's something that tends to be embedded for those people who learned their times table at school by rote. By just sort of, in class, what would you do? You'd say your timetables out by rote. And those people who went through that educational process seem to have remembered the times table just like that. Or at least they can now say what 9 nines are, just like that. But those who went through those progressive times when, learning by rote was definitely not on, research has shown that they struggle a bit with that. So it's the same with trading rules. If we can do whatever it takes, for some people, chanting works. For other people, they want to do some meditation. For others, they just write them down. And they look at them and they read them again and again and again. Whatever needs to be done to get them embedded in the subconscious, so those little weevils of belief haven't got any room to get in. Don't allow those beliefs to creep in. And trade modest size. Keep it small. Keep it well within 1% of account size, certainly for intraday traders. And focus on scalp trading, because scalp trading is taking, for intraday traders, works also for swing traders. But scalp trading absolutely forces the discipline to take partial profits once the momentum starts to fade. So, how many times have you taken a trade and it's moved in your direction, and you think, God, blimey, that's a living good little profit there, and for whatever reason it comes back and it actually takes a stop out. Has that ever happened to you guys? It certainly happened for me more times than I've sort of care to remember. And what you've got to do is that, I'm actually a comment. Guy, you are giving me some tremendous comments this morning. This is absolutely great. So, it's so true that so often, we get carried away with the emotion of it all. We think, oh, yeah, blimey, this thing has gone up and it's making, we're sort of £100 in profit, £1,000 in profit, or whatever it happens to be. And we think, this is great. And do you know what our brain does? Our brain, tucked away, that weevil in the brain is working away then. It's saying, right, well, look, you've just made this 100 call it $100, and it extrapolates it up, and it says, oh, right, well, if you just, it'll then be 200 and then 300, and after that, if you add a string of these together, the brain says you're going to be a millionaire in 6 weeks. And that all goes on, and our conscious brain hasn't a clue that it's all going on. And that will very often keep us in trades way, way after the time that we should have got out of it. So, come back into defensive mode. Trade small, scalp trade, and once the momentum starts to fade, take at least half profits. At least half profits. Now, we don't quite know where it is, and it's difficult to put an absolute number on it, but something of a rule of thumb would be that whatever your stop loss is, if the trade goes into profit by approximately that amount of the stop loss, that just might be a time to start scaling out and take partial profits. Okay? And then move the stock to break even, so that profit cannot become a loss. So it cannot become a loss. So by this time, we're getting back our cool. We're calm again. We're not getting carried away in the markets. And what we've got to do, we've got to be content to just, I don't know if occasionally is quite the right word, but just to take trades that present themselves with the best setups and just sort of fall in front of our feet so that we can just, without any effort, just take the trade. So that we haven't got sweaty palms. We're not yelling at the screen. We're not sort of jumping up and down. We're cool, calm, and collected, and we can just take these trades when they present themselves. And if they don't present themselves, we ain't going to go looking for them. They're either going to be there in our little universe of markets that we look at, and if there's no good trade that we can see, we ain't going to jump around and think, oh, yeah, there's got to be a trade here somewhere. And maybe my strategy is not quite right. Maybe I got to alter the RSI or the limit moving averages are not working for me today. Let's just put some other moving average numbers in there. Perhaps I'll find a trade if I do that. And that's rubbish thinking. It will kill us. It'll kill us. So we just need to accept that the market is going to give us trades. It's going to give us some cracking trades from time to time. But if we start getting the old shovel and picks out and we're looking like crazy for them and we're digging and trading 24 hours a day, it just ain't going to work. So let's just take those occasional trades, or those trades when they present themselves. Yeah, absolutely, Roger. You've got it. You've got it on the button. Yeah, don't think. Wait for the market to objectively show us. And as soon as we can start to pick up a few of those better trades, it builds the confidence back. This is not a job of work. We will not make more money by spending more hours at the chalk face, at the cold face, in front of customers. It doesn't work that way. It's a bit more like waiting for a number 9 bus. Sometimes you've got to wait and be patient. And then just when you're thinking about quitting and walking or thumbing a lift, darn me if there aren't 3 or 4 who turn up all at once. And it's just like that in trading. Every now and again, you look at the market and think, oh, there's nothing for me there. And then you just wait, or you go away, you come back and think, oh, look at that, sport for choice. So many opportunities. And the key thing is to never again allow the brain to lead us towards that losing spiral. So as soon as you feel that there is a belief coming in about the market, and that you feel super confident about that belief. And you start to get that strong, strong confidence that then leads into pride in the fact that, I'm a brilliant analyst. Yeah, I get it right all the time. That's when that Superman cape is starting to flow and you're just about to go into a series of losses. And that's the thing. You've got to delete. In fact, I couldn't put it better myself. You've got to delete that losing spiral permanently and start to pick up the warning signs that if ever you start to get towards that losing spiral, you've just got to break it and chop it and not allow it to become dominant. Right, okay, guys. Well, there we are. That's really all I wanted to say this morning. I hope I haven't depressed you too much. It's a reality that we do go into these situations every now and again. And in fact, what's quite interesting was that I was speaking to a trader not that long ago, and he sort of said that he went into one of these big losses, and he just couldn't believe it. He said, I've completely and utterly lost my confidence. He said, he said, I'm afraid to trade. I'm just afraid to trade. And then I saw him a little while after that, and I actually sent him some material. In fact, I sent him the Victor Niederhofer links. And he said, "Oh, all right. Oh, yeah, of course." He said, "He said it happened to me." He said, "But it's happened to all sorts of other traders." And then he picked up on a trader who was subsequently become an extremely successful trader. And he said, "Well, this just happens from time to time." And he said, "Yeah, do you know what? The fact that others had been through that situation," he said, suddenly gave me the confidence to carry on." And he did. And he's still trading. Not super successfully, but the guy is making money. So there we go. Right, okay, guys, I'm going to leave you to it right now, and look out for my next course, the 10-minute swing trader, of which you have just had a little preview. So enjoy your trading, stay cool, stay calm, and avoid that super person cape. Bye for now.